Hello, thank you for attending this webinar. My name is Yee from the Yee Real Estate Network. And thank you for taking time out of your day to listen to this presentation. And my special guest speaker is Mr. Justin Zawodny, our network partner in the Southwest Florida Cape Coral market. And welcome, Justin. And thank you so much for your time to take out of your day to do this webinar, just to give our investor an update what's going on. So thank you so much. So the agenda for today would be we're going to go over what transpired in this past year, 2021, what some of the investor experiences and testimonials that and what happened with their portfolios by purchasing, by working with you, Justin. And we're also gonna go over the economic trends and with the real estate market here in Southwest Florida, Cape Coral, and we talk about Justin will also talk about about the crash, correction, or bubble situation that some investors are concerned about. We're gonna clarify that, and then we're gonna talk about what we don't have a crystal ball, but we can talk about 2022. What is our projection in the Cape Coral market? What are the inventories is like? What are the investment opportunities for out-of-state investors such as our network buyers? To what's in store for us moving forward in 2022 and beyond. So a lot of great things to cover. So without further ado, Justin, take it away.
Great, thank you, Mr. Yee. Yeah, it's been a really strong year for all the investors that we've worked with from the Yee Real Estate Network. Going back to when we started working with your network, it was early 2019. So it's been a couple of years now that we've been helping investors, and we have a number of success stories already, with quite a few more to come in the coming year. The first property we helped someone purchase was I'd say early second quarter of 2019. By the time it finally closed, that property was in Labelle, and it's already seen almost a 45% increase in value over that time, and that's just in addition to very positive cash flow over that time too. During which it had zero vacancy. It's been 100% occupied over that time, which it has been really good. Moving forward a little bit into 2020, we obviously saw the portfolio from your investors grow significantly this year. A number of people did make the decision to buy, and the numbers are incredible, really. Looking at the Cape Coral market, we had investors purchasing single family homes as low as $285 that are currently valued at $375. We're looking at incredible equity gain. And as with the rest of our properties, vacancy was, I think, about 16 days at the beginning of that investment, from the time they purchased it to when the renter moved in. And it's been 100% occupied ever since. We're always getting payments and rent. Looking at some of the duplexes purchased in Cape Coral, same thing. We saw investors purchase duplexes beginning of 2020 for the 360 range, 365. They're valued at 525 right now. Incredible equity gain, and same thing. I think that property is at about 98% occupied over that time. There was one short period of vacancy where someone broke a lease and actually worked out in favor of the investor. We were able to raise rent during that time. Incredible performance by these properties. Even more than we could have really predicted. We knew they'd be good. I don't know if anyone knew it'd be as good as it has been, but something that we definitely expect to see moving forward. The properties in these locations are continuing to see value increases. Rents are continuing to increase, and it's really working out really well for the investors who are pulling the trigger, making that decision to buy and moving forward. I'm looking just through some of my notes here, I think the lowest amount of equity gain that we've seen from any investor, right, so far, it's a property that the contract was signed 1 month ago. They've only been under contract. They don't even own it yet. They've been under contract for 30 days. Went under contract at $348,000 for a single family home in Cape Coral. The home is currently valued at $375,000. So they've seen an 8% price increase from what we were able to get them the purchase price at compared to what they could sell it at. And they're set up for several $100s a month of positive cash flow. And by the time they close on it, I expect them to have 12 to 15% equity right from the very start, from day one of closing on the property. I mean, incredibly strong numbers, things you really don't see. Even in our lower price point market of Labelle, right? Our highest purchase price that we've seen there was $235, and that was 2 weeks ago, and it's up to $240 in value. So we've already seen $5,000. They don't own the home. Seen $5,000 worth of equity created in a matter of about 10 to 14 days. And I don't see anything slowing. As I look at these numbers, the Cape Coral market in particular, there are 523 homes that are active on the market right now. Now that sounds like it could be a big number in some places, but in Cape Coral, that's not nearly enough. In the last 120 days, we've seen 2,189 closings on single family homes. So it's 18 closings a day. So with the 523 active homes that are available right now, we have about 29 days worth of inventory available. 29.
Yeah, and the total population of the Cape Coral Fort Myers metro is almost 1 million. 1 million in population, you have only a handful of properties that are for sale in open market. But what the value you bring, Justin, is that you are not taking our investors into a multiple bidding offer situation. You are working very closely. The local builders in your market, they trust you because you have done so much business with them. So anytime the local builders have those new construction, new lots available to sell, they come to you directly because you perform, because you bring them buyers, our investors, and our investors perform. So you provide value add, Justin, because not every realtor can work with investors, right? So you provide such a value add, right? I mean, there are more realtors in your market than there are houses for sale, right?
Oh yeah, so Cape Coral, there's 523 active homes available. Cape Coral has about 2,500 realtors. So there's only so much available to buy, and there's a lot of people trying to do it. But you're right. I mean, and part of what we've built is in part to your investors. I'm very thankful for that, because your investors are serious investors. They sign contracts for homes, they qualify for the homes, and they buy the homes. Never had any type of scenario where we get into shaky grounds where we're not performing as buyers. And because of that, I've been able to build these very strong relationships with the builder to the point where, we can set expectations very realistically. When we go to the builder, we know we have about 36 hours where that home is ours if we want it. We're not going to be in a multiple bidding war. We know we're going to get it. Once we cross that, we know that it could be introduced to other buyers, which makes it harder on us. But if we make a very quick, decisive decision, we can get the home very easily. And then it's also now gotten to the point where when someone else's buyer gets shaky and the home might be coming available, the builder knows to come to me first, tell me, hey, this address is on the fence, might be available in about a day or two. We can get someone ready. And as soon as that contract falls through, we can swoop in, get the home. No competition. We do have limited negotiating power, but there's no competition. We're not in the bidding war where there's 35 active, buyers, all with contracts above ask, and we're paying, $450 for a $350,000 home. We've never done that. We don't plan on starting. The most we've ever had was, I think, 2 active buyers, us and one other, And it's because we took a little bit too long. We knew that we needed to move quick. We took a little bit more time to look at the numbers, and it does put us into tight spots sometimes, but we always do get that first shot.
So the exciting news is, Justin, I have a number of investors that have already reserved the lots on a number of single-family homes and a number of duplexes. Those houses going to be completed in hopefully the first quarter of 2022. While their lot is being built, there's a good chance that the equity will grow on the value of the house. By the time they close escrow, they have some built-in equity already.
Yes. In all scenarios, everyone that we've worked with to this point, from the time they've signed the contract until the time they've closed, at a minimum, they have made enough money in equity where they could sell the home day one. You might only make $1,000 when it's all said and done. It's not worth your time to do so, but you're not stuck in the deal either. There's enough equity there where you can pay your selling commissions, you can pay your closing costs, and get the money you put into the project out without being any worse off. Which is, it sounds like something little, but having that flexibility is very unusual to be able to build that much equity that quickly.
But our investors are smart, because you and I educate our investors, although they can flip, if you will, but we're not going to encourage that. We can encourage our investors to buy and hold for a long time and bring in a outstanding tenant and let the tenant pay off our mortgages over time, invest for the long term, invest for cash flow, and then equity appreciation over time is just an icing bonus
exactly.
Icing on the cake.
Exactly. These are without a doubt, these are long-term wealth building tools. They are not something where you're going to get in, you're going to make a great return in 90 days, and you're going to do it 4 times a year. That's not what we do. It's not what we specialize in, and it's just not realistic in any matter. It's a totally different market from what we're dealing with. What we're dealing with is buying homes in areas where there's strong appreciation, where there's strong tenant performance, where there's strong cash flow, and allowing someone for the next 25, 30, 40 years to own this home and really build quite a bit of wealth by doing so. And there's examples of that happening already in the short term. And when we do a webinar here 10, 15 years from now, I can't wait to be able to tell the new investors about, back in 2020, we were able to buy these homes for $285,000, and now they're worth $550, $600, whatever it may be.
Yep.
It's going to be quite the conversation to have, and those examples are there, and we're seeing it happen.
Yeah. I like to go. I like to wait to see 10 years from now and have another conversation. For those of you that took action to pull the trigger, wow, you guys are happy camper. 10 years later, your house will double, whatever. You make a lot of money, and you're able to retire and live the dreams that you want to live. Create the retirement for people out there. So, all right, let's get back to the current situation. Okay, let's moving forward. So, Southwest Florida, Cape Coral. So what's the economic driver? Real quick, okay, we're running out of time already. Real quick, why Cape Coral, Florida, Southwest Florida is growing so fast? Population growth, job growth. Let's briefly discuss about that. And migration, of course. I mean, migration pattern is because of COVID, because remote work, people, or just coming to this market especially from New York and New Jersey and Northeast. Not just that, people from California coming over to live in Southwest Florida. I know you and I know Southwest Florida is a beautiful place to live. I mean, outdoor activities, you have water sports, you have sunshine, you have great lifestyle for retirees, for millennials, for everything, good job diversification of industry. Okay, I don't want to steal the thunder. You tell me why.
Exactly. Everything you said is part of it, right? I mean, over the last 18 months, there has been a historic movement of the population, right? People are no longer chained to living close to the office. They can live wherever they want. And we're seeing them come to Florida because of it, right? It's the middle of December, right? It's 84 degrees outside right now.
Oh.
in sun. It's a beautiful day. I can tell you right now, the beaches are definitely packed right now. And who wouldn't want to live in an area like that?
Hey, by the way, I'm in San Francisco Bay Area. I live here, right? San Francisco Bay Area for many years, for 30 years now. Right now it's like 50 degrees. 50 degrees and it's raining. But go ahead.
So, I mean, beyond just Southwest Florida being a great place to live, there's been a lot of economic opportunities as well. One, people are able to keep their jobs in the Northeast, out West, in the Midwest, wherever it may be, live in Florida and still make that income. That is a very real option right now. In addition to that, locally, there's been a boom in the economic status, I guess, or the economic opportunities in the area, which has caused a number of jobs. People can work, whether it's something like a construction trade, which is in incredibly high demand right now and pays very well for quite a few of those trades. You could work in Amazon distribution. They've opened up 3 different distribution centers in Southwest Florida in the last 18 months. And each one of those centers has thousands of jobs, right? We're not talking about hundreds of people, thousands of people working at that location. There's new hospitals being constructed. Everyone knows the number of jobs required to keep a hospital running, the number of very consistent, very well-paying jobs to keep a hospital running. There's new hospitals being constructed in the area. All of that has led to this growth. This year, the last time I helped somebody from Florida purchase a home here in Florida was in February. Since that time, every single deal I've done has been someone from California, someone from the Midwest, sold numerous homes to people from New York who are coming to use them personally, as well as investments. The tenants that we're renting these homes out to, I've helped tenants who have jobs in the Midwest, who moved down and are now working remotely. I've helped tenants who have jobs internationally, who moved to Southwest Florida, and have remote jobs internationally, but are living here. I've helped tenants who have remote jobs. What was the last one? In California, who moved here and wanted to rent. And they're great jobs. They're salary jobs, confirmed with the employer that working remotely was going to be on the table for the long term, and they've performed incredibly. So all these people coming has caused such a housing shortage that it is, a perfect scenario for an investor. You can buy the home, watch the value go up very quickly. The demand to rent a home is so high that the rent is exploding. Looking at the duplexes that we manage, when we helped the first investor purchase the very first duplex that we were going to manage, it was February. We rented that home out for a record price of $1,400 per side, right? By the time we had our first vacancy in September, we were able to, again, set another record price of $1,600 a month. Gone up $200 in a matter of 6 months. That's pretty quick. Right now, our next vacancy is in January. I currently have a wait list for, again, another record price of $1,900 for the 3-bedroom, 2-bath duplex. So in less than 1 calendar year, right, from February to December, we've seen that rent for the same exact unit go up by $500 per month. The mortgage didn't get any more expensive over that time. It just created additional cash flow for these investors. And we're still renting these out incredibly quickly. We have a wait list. Day 1 of vacancy, the cleaning crew is going to go in. We're going to get a fresh coat of paint. We'll have someone living in there very, very quickly. It's a race for us. It's not even, let's hope we can find someone. It's a race for us to get the unit ready so we can get someone to move in. It's a really great situation for an investor right now.
What more can an investor ask for? Just you check all the boxes. It's amazing. Cash flow, appreciation, potential, equity growth, great tenants, low vacancy, and Wow, wow, what a great time to be an investor. So, okay, let's switch a little bit. Let's talk about a little bit about, there's always people out there, they have a negativity, about the bubble, the correction, even the crash. So, I mean, you and I do not have a crystal ball, right? We're not economists, but share with the audience your strong belief in your market that is not expect to happen. Show me some of your data and thoughts.
So in the last 100 years of the real estate market in the United States, right, there have been two large bubbles, right? One of them was a Great Depression, and one of them was in 2008.
Yeah, 1929. 1929.
1929, the Great Depression, right, and then 2008.
Right.
So they're almost 100 years apart. So part of, in my belief, why investors are so ready for this bubble is it's just a recency bias. Very recently just recovered from one, so ready for the next one, which historically speaking, if you can predict the third bubble burst and you knew it was only going to be 10 years after the last, hey, that's incredible, really. I mean, you have some really good data and you have an eye for it. And that's, I don't know what else to say. That would be quite remarkable. But historically speaking, during the Great Depression in 1929, right, we all know that the stocks fell incredibly. Stock market fell 73% during that time period, from 1929 to 1932. During that same time period, real estate values fell 35%, right? A home back then, you could bought it for $6,000 in 1929. It dropped to $3,500 by 1932. And if someone's owned a house since 1932, talk about equity gain. If you bought a house for $3,500, I can guarantee you're making quite a bit of money right now. But I mean, you saw a pretty good decrease. 2008 to 2009, same thing. Stocks, they fell by about 54%. The real estate market fell by 33%. So let's take that to now, right? Because going back 18 months ago, right, we had investors who were ready, they were going to wait for the bubble, and that's when they were going to buy, right? So let's say I was one of those people. I didn't want to buy. Once that bubble hits, I'll buy. In the last 18 months, the market's gone up about 40% in Southwest Florida. It's gone up incredibly. Last year alone, it went up almost 30%. So if we see another bubble, as unlikely as it is, and prices drop by 30 to 35%, I'm still no better off. I waited 18 months to still see about a 5% price increase. So, I mean, did I really win? I don't know. I don't. It seems like it just lost 18 months worth of cash flow is about all that was accomplished. Moving forward, if you look at the projections from large data sources, a lot of the zip codes we're still projecting about a 20 to 25% growth next year. And when you look at the shortages in the inventory, that doesn't seem unrealistic. So let's say I bought a house today, I own it for a year, and then we did see the big correction in 2023, right? Okay, well, even if prices go down by 30%, I'm no worse off. I'm right back to what I purchased it at, and I'm going to gain cash flow. And in both the case of the Great Depression as well as 2008, within 4 to 7 years, the market had fully recovered. So if I sit there and I get positive cash flow, and then the market recovers, great, everything went as planned. And then we see a nice, boost in value. And in the long term, this wealth building tool did exactly what we're projecting it to do. And that's the key. Even if there was ever any type of correction, I'm not selling a home to someone saying, hey, in 2023, we're going to sell it, you're going to make a bunch of money, and it's going to be great. I'm saying you're going to buy it, we're going to manage it for you, and who knows, maybe 2035 we'll have that conversation where you're ready to cash out and get some money, and we can do it then. And I would be, I don't know, I think we have much bigger problems if a home is worth less money in 2035 than it is right now in 2022. I think that means some things went very, very wrong besides just the real estate market.
Well, Justin, you have just talked about this subject in a fresh perspective, and I heard other people's take about about what you just said, but you are taking into another narrative, which is good, another fresh perspective to clearly explain to people out there that yeah, as long as you don't worry about the short-term, fluctuations or whatever. You just, as an investor, I teach my investors from the beginning, you buy and hold for the long term, and in the course of 10 years or more, I mean, based on history, most likely we can do well. So stay the course, be disciplined, invest for the long term, and don't worry about the, all the naysayers, all the negative publicity, all the YouTube, crash videos and all those.
One of the best pieces of advice that I've ever heard, right? When you're looking at any type of graph that shows a trend, zoom out, right? So I mean, look at like, for example, the stock market, right? And we look at the graph today, right? And it might look like this and go down a little bit. If I zoom out to a week, it might look like this and still end up a little bit up. If I zoom out a month, it's probably gonna look a little bit more like, a straight line. You zoom all the way out to, 20 years, right? Even 10 years, the lifetime of this investment that we are telling an investor to plan for, the line is almost always going to have an upward trend. And if we take it and we look at something like the real estate market, it actually it shows a exponential growth. It's not even a straight line. If we look at something like the rental market over the last 40 years, it is almost a straight line going up at 8.5% per year. I mean, I sent you the picture, was last week, I believe.
Yep.
It is almost a straight line over 40 years of rent going up. So if we lock in our price today with positive cash flow and rent continues to climb over the next 10 to 15 years that you own it, you're going to make lots of money just from that alone.
Yep.
Beyond the fact that the home is going to gain value as well. And that's, again, why we're not just selling a home. We're not just selling an investment. This is a wealth building tool that is going to net significant growth over a long-term period.
Well, Justin, we could talk all day, but we're running out of time. But let me say this, and I would say this honestly, right? Justin, I've been around for a long time, right? I've been running my real estate investment club for more than 20 years, and I've seen everything. And I work with our network turnkey provider in different markets. I promote other markets as well. But I can honestly say, and I have a lot of success helping my investors over many years. But I can honestly say that working with you is very refreshing. It's very different in a very good way, because you don't have to tell me or anyone your age, but I surmise you are one of the millennials. You're young, given what you're doing. But I can only say my investors' feedback from the people who work with you, from our investors working with you for the past few years, they have nothing but some very good things to say about you. You care about investors. You hold their hands. You walk them through the process. You're easy you provide good service for our investors. You always follow through. You answer their questions. You take your time to address their concerns. You are also the property manager, so you've been managing the properties. So you have a team on the ground in Southwest Florida. So you're in it for the long term. It's the only assumption I could make. Being as young as you are going to grow with our investors for years and years to come, because you're already a success. I don't know what kind of background you have. Being so young, you're so mature in your ways. Look, I may be wrong, but okay. But I'm so happy to work with you, and my investors have great experience with you. So we can have a very long-term future. So with that said, we expect we're gonna do a lot of business together. You're gonna help my investors for long term. I'm just so happy to have the opportunity to work with you. You have good value system, good proposition, good core value, and you care about our out-of-state investors. I really, for that reason, for the past few years, I really enjoy working with you. And just so keep up the good work. And so we only have 1 minute to recap. So the future of real estate investing in Cape Coral. Briefly tell us the protocol, what's going to happen when our investors, when they reach out to you, what are the protocols? I know that inventory is very, very, very limited always, but our investors have to pull the trigger quickly whenever there's a listing available, because, so tell us about the process.
Yeah, I mean, right now we have 3 types of investments available here in Southwest Florida. We have single family homes in Labelle, which is our Central Florida interior market that comes at a lower price point. We're in the mid 200s there right now. We have a single family opportunity in Cape Coral. It's in the mid 300s right now. And we have duplex opportunities in Cape Coral. And those are in about the 500,000 range right now. All of them have positive cash flow, strong appreciation potential, and we have a history of all of those working in your network already. The best way to move forward is to get in contact with you, right? Mr. Yee is going to speak with the investor, make sure that they're prepared for an investment like this, and get them in touch with me. Once they talk to me, I'll answer any detailed questions about the specific property, the market, how our process works, whatever it may be. From there, we take over as your buyer's agent. We help you purchase the home. We have these direct relationships with the builders where it's a very quick, short window, but we're going to have about 24 to 36 hours where we get the first shot at the home. If we sit and analyze the numbers beyond that, there are going to be other buyers that we're competing against. But if we look at the projections, and then when the home becomes available, quickly look at the numbers for that specific property and move forward, the home is ours. We're going to get it.
So you reserve the lot. What's the earnest money deposit to reserve the lot?
If we're just reserving a lot, there's no deposit. If we are signing a contract for a home that is in construction, typically with one of our builders, it's $1,000. Some of the builders require more, maybe $5,000, some as much as 10%. All depends on the specific builder and the specific property that we're going with. But we know what it's going to be in advance. This isn't something that's going to be, tossed on you as the contract's available. It's something that we can plan and prepare for before the contract gets to us. But once that contract gets to us, we need to move quickly. We have a short window to get that home while we're the only buyer there, and it works very well. Once we close on the home, that's when we take over as the property manager. We're going to place tenants. We're going to coordinate any repairs, any maintenance. We're your eyes here locally to make sure that everything is moving correctly with that property. And then, like you said, we're here for the long term, right? We're going to be here. When you own that home for 10, 15, 20 years, we're going to be here to help you sell the home at that point. We're a full service real estate brokerage. And by being your buyer's agent and then your property manager and then helping you sell it, you're not going to find another company that's going to match our prices. It doesn't exist. In almost every single situation, we're about 25% below our competition because we're involved for the long term. We help you make the most money possible, which is something we really take pride in.
Yep, absolutely. Well, there's a very good recap, Justin, as always. So we out of time. We love to talk more, but thank you so much. And right now, this is December 2021. We're looking forward to a great year for all the investors. Thank you for working with our out-of-state investors, and we look forward to much more to do down the road. Thank you so much, Justin Zawodny. Goodbye, everyone. Have a nice day. This is Yee. Bye-bye.